Well, today we're talking about going through the divorce process and what do you do about that great interest rate you might have on the home? Is there any way to refinance, any way to assume that mortgage rate as you file for separation? We'll get into that with Bill at Cross Country Mortgage next. Welcome into the Smart Mortgage Show. In this video, we're going to talk about what to do if you're going through that divorce process. If you have a good rate, how to not get rid of that. I know that's the big question, Bill, is people, hang on to these rates. There's still a number of people that are sitting on great rates from 5 or so years ago that don't want to give them up, but divorce presents a few different options. So I want to dive into that with you. And, as we talk about this, as you're going through this process, I think the first kind of question that comes up to me is, what is an assumed mortgage? I guess that's something that I've really heard about before, but define that before we get into kind of what the options are here.
Yeah, so to assume a mortgage means that you somehow qualify to take over an existing mortgage, a mortgage that's already in place. So just picture that the loan was taken out in this case, right, Ben? So we're saying the rate's in the twos. So the loan was actually taken out in 2020, and we don't want to put a new loan in place at the higher rates. We want to assume the existing loan at that lower rate. So that's what an assumption is that somebody assumes that existing loan, and there's a process around doing that. It's not always easy.
So that's something you could do, like if you were on a mortgage with a partner or spouse, you could assume that on your own. Is that what you're saying? And take that one other person off the loan?
Yeah, exactly. So there are a lot of rules surrounding assumptions and who can actually assume the loan. So, for instance, in that situation where you had a husband and a wife, and let's say the wife wants to assume the loan after their divorce, so the wife would now need to qualify for that loan on her own. So she would need to requalify. They're going to look at her credit, her income, her debt ratio. Does she fit into all of the necessary criteria so that the lender feels like she'll be able to continue to pay that on her own going forward? Now, I've seen situations where it's like, okay, we want to take the husband off. Does the wife qualify on her own now? And I've had scenarios where the wife might say, well, I have a new partner and I want him to come onto the loan. And you usually cannot add another qualifying person on the loan. You can remove somebody, but you can't now add somebody else. So does that remaining person qualify on their own? That's the question.
What does a relationship have to be for that, Bill? Because, this is what I think everybody would love, if you could just assume your mortgage from someone else that maybe has a certain amount of money on there. What does the relationship have to be? Do you have to be a part of the loan already, or does it have to be someone that's immediate family? What is the requirements there?
Well, it's usually when you assume a loan, it's somebody that's already on the loan. In this situation, in a divorce. Now, there is a VA loan's assumable, an FHA loan is assumable, and that's a very different process where somebody buying the house could assume the loan that's already on the home. Okay, so in those situations, those folks are not already on the loan. Okay, but in a divorce situation, the people that can assume it would be one of the original people that was on the loan, not adding another person to qualify. So it doesn't really matter if they're married or not. It just matters that they were originally on the loan. And we remove one of the original people. Does that remaining person qualify?
You said this is a difficult process. It's not just a very simple, hey, my ex is going to assume this and we're going to get it cleared up from there. So what options then do you have, or what's kind of the most common path for couples in this situation that are splitting, and then one party wants to continue to live in the home and assume the mortgage? What are the options they have, and what's the most common, I guess, course forward?
So there's really a lot to think about. I think dealing with a mortgage professional to help you through the process is probably the biggest problem, because when you assume a loan, there isn't a person like me or a team like mine that helps you through that process. It's direct with the current servicer of the loan. And I can tell you they're not super helpful. It's not there's not a lot of visibility into the process. There's not a lot of guidance. There's not a lot of advice. So that's another part of the problem is, how do you plan for this? Because there's ways to structure the terms of the divorce that'll better help the person who wants to assume the loan, who wants to stay in the marital home, right? That person, there's a way to structure the divorce in a way that helps them to more easily assume that property, and no one's really guiding them on that. So that can be really tough for the person that wants to remain in the home and assume that 2.5% interest rate.
All right, very good. And I don't know, divorced couples, I know you work with people that are in this situation, right, that are looking for either to find a new home or figure out what their next steps are. That's something that Cross Country Mortgage can help with and at least help provide some insight and guidance on.
Yeah, so I actually have a certificate in divorce mortgage guidance, and we deal with a lot of individuals that are in that situation. It's a unique area of lending, and there's actually a lot more that we can do to help that a lot of loan officers, if you're not trained in it, realize can be done. So we definitely are always happy to assist in those situations because they are pretty unique, and there's a lot of consideration to how to structure the terms of the divorce in a way that might help if both parties are agreeable to it. If both parties are not agreeable, then we have a different strategy. How do we work in that scenario to help of course, the person in the situation that's our customer? How do we navigate them towards either retaining the house that they currently own, the marital home, or if they're what we call the out spouse, they're getting removed out of the marital home, how do we help them to secure another piece of real estate to live in? So definitely a lot there, and certainly we're happy to navigate you through that.
Well, if you're looking for help, you're in this situation or know someone that is, you can always get in touch. Just text the word LEND to 21,000 to get on Bill's schedule, begin talking about any questions or concerns you might have, looking for some guidance to get through this process. I know it is incredibly difficult. It can be obviously emotionally draining as well, but this is a big decision and obviously a big piece of your financial future is working out the house. So if you have questions, again, please get in touch. You can also check out the show description as well to get all the contact info you need for Bill over at Cross Country Mortgage. All right, Bill, good stuff. I know this is a tough situation for a lot of people, but thanks for providing a little clarity here.
Yeah, absolutely. And as you said, reach out. We're happy to talk it through with you and see how we can help.
This program is for informational purposes only. Please consult a qualified professional before taking any action. Bill Litton is a loan advisor and regional president with Cross Country Mortgage, NMLS number 147060.